We know many in the industry, they're hunkering down, they're focusing on operations and asset management. But when those capital markets start to loosen and rates start to fall, I think this sector will be pretty quick to see significant investment.
Welcome to BuzzHouse, a Baker Tilly podcast where you can hear all the buzz around multifamily housing, with all the info you need to help you win now and anticipate tomorrow. Hi, I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrick Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Let's get started. For today's episode, Garrick and I will be giving an overview of Baker Tilly's third quarter commercial real estate market report, of course, focusing on the multifamily sector. The report is written and led by our business partner, Brent Mayer, and Brent and his team, we thank them for producing this report that Garrick and I will walk through. A quick bit of news before Garrick and I jump into our discussion. The U.S. Department of Housing and Urban Development, or HUD, recently published a notice establishing the operating cost adjustment factors, otherwise known as OCAFs, for eligible multifamily housing properties with an anniversary date on or after February 11th, 2024. The national OCAF this year is 5.3%. So again, a kind of a fairly robust percentage compared to historical averages of probably closer to 3%. Again, the average of 5.3, and states vary from 4.3% in South Dakota to a high of 7.1% in Connecticut. This nationwide rate is a small drop from last year's 6.1% OCAF. OCAFs are calculated as a sum of component cost changes for 9 components and are used, of course, to adjust Section 8 rents. So again, 6.1% last year, 5.3% this year, again, quite a bit above the historical averages, again, which are closer to 3%. Now, Garrick and I will jump into a summary of the third quarter Baker Tilly real estate report. Garrick, we have typically, just before we delve into multifamily specifically, what are we seeing? What's the report seeing on kind of the general economic overview?
Yeah, thanks, Don. Thanks for the intro, by the way. So with the level of employment overall, it's kind of remained strong with the unemployment rate ending at about 3.6% for the quarter. So keep in mind, 3.6% was the rate we actually saw in 2019, and it hadn't been that low since 1969. So that's extremely interesting to me where we're at with that unemployment rate. Inflation, though, it ticked up just a bit, which pushed the analyzed consumer price index growth rate up to 3.75. That's up from 3.32% at the end of the second quarter. This is well above the Fed's stated rate of 2%, but this is, of course, well below the spikes in 2021 and 2022. But I know that we've discussed insurance costs, and I'll kind of go into that a little bit later too on some recent podcasts. But in the third quarter, there was still a large increase in insurance costs where other things are kind of starting to taper off. So hopefully this trend begins to creep in the opposite direction for everyone. Insurance costs, it seems to just be the topic of conversation. It just keeps going up.
Here again, it's just interesting. Back to 3.6% unemployment. We think about it. I know even our sector, many sectors, it's hard to find employees. Well, 3.6% unemployment, again, as low as it's been since 2019, but really almost historically as low as it's ever been on a nationwide basis. I think one thing we're always monitoring, obviously, in our industry too, is construction pricing. As a whole, what's the report kind of tell us about construction pricing?
Yeah, I know you and I are always looking at construction pricing because we're always trying to get deals to work and the feasibility of these. Well, I will say the third quarter saw a slight increase in construction costs. I know we didn't want to hear that, right? But after the second quarter, we saw essentially no increases in costs. I thought we were going to track that way, but I guess not, right? So if we annualize that rate for the quarter, it comes out to about 3%, trending below the overall CPI noted earlier of 3.75%. However, lumber costs are significantly down for the year, and overall cost year to date is less than 1%. On another note, though, I mean, I know this all is interconnected. The Fed only made one interest rate increase. However, if things keep going up and inflation is trending there, and the Fed remains focused on monitoring this, so who knows? I mean, maybe we'll see other interest rate hikes, but hopefully not.
Very good. I think, Garrick, is interesting with construction. Yeah, if it held at like 3% average, I think people could live with that, right? That seems to mirror with a lot of trending. So, Garrick, that was a great overview, general economic overview. Let's move into multifamily sector. I think operations are an interesting piece. And a lot of people are talking about, hey, I just need to focus on asset management right now, right? It's maybe building new is difficult. I need to asset manage. What's going on? What's the report tell us about operations in general?
Yeah, I think this is obviously the chunk of the report that I like to talk about because, operational challenges in this sector, it really intensified in the third quarter. So, according to Apartment List's October 2023 rent report, rents nationwide are about 1.2% lower than they were 12 months ago. So, this report notes that these decreases are consistent across the country, and 85 of 100 large US cities are experiencing these declining rents. Of course, rents are still very high, right, with respect to historical levels. So just because there's some declines, I wouldn't get too excited, right, or at least too fearful. However, Redfin reports that maintaining these higher rents comes at the cost of high concessions, right? So these trends seem obvious due to significant supply increases from the market rate side, right? But when you look at affordability, there's projects that are pre-leased before they even place in service. So the demand there is still super high on the affordable housing side. But for market rate, I figure it's as expected, right? Because of all the supply increases that we're seeing. Similarly, overall vacancies are increasing on average across the country, but vary widely by market. Again, in affordable housing, we're seeing very low vacancies. And matter of fact, RealPage noted that apartment completions in the third quarter were the highest in over 3 decades. So there's a lot of stuff coming on the market here. But again, with affordable housing, I don't think we're seeing enough of it. These projects that just came online, think about it, they would have had to start it before these significant rate increases. So most likely starting construction in late 2021 or early 2022 when lower rates were still in place. Everything we're seeing after that, they're having to contend with all these rate hikes. And so that's kind of putting pressure on them. As far as net operating income margins, those are being pressured with expenses, as you know. I mean, a Marcus Millichap report from August noted that multifamily insurance costs, here we go again with insurance, per unit were up 33% over the prior year. That's a huge increase. This is very consistent with the recent podcast we had with Ed Malaspina with the HAI group, right? We just had that podcast, and this report highlights that insurance now is representing on average 8% of per unit operating expenses. In addition, we're seeing property taxes and utilities continue to rise. But I don't want to be the bearer of bad news, but I mean, there are OPEX pressures out there.
Oh, Garrick, for that. I think you're right on the affordable side. We just saw an 84 unit project, 60, 70% pre-lease, leasing the balance of the units in 1 or 2 months. So it's interesting to keep your eyes on, as you noted, kind of the more units being placed in service and what's happening. Garrick, maybe kind of switching gears a little bit. It's very interesting. A lot of things coming out of the federal government right now. We've been focusing on the IRA. We're all kind of watching the Affordable Housing Credit Improvement Act and so forth. But we also saw some things coming specifically out of the White House. And maybe a question for you, Garrick. What is the White House, what is it issued here in the third quarter? What kind of housing issues are continuing to be addressed coming directly from the White House?
Yes. I mean, as you noted on other podcasts and throughout the year too, this administration has been focused on housing. I mean, at least that's what we're hearing, and we're seeing some stuff trickle out. And I know you and I probably want to see a lot more. But in reality, they continue to roll out various housing related programs. For instance, HUD announced an $85 million program to identify and remove barriers to affordable housing. And the Department of Transportation, right, they're launching a $3.1 billion program for planning and construction improvements to improve those linkages for disadvantaged communities. So hopefully that will kind of bolster that. The White House has also released a fact sheet in relation to additional renter protections that cover areas such as incentives for zoning changes because they want to promote additional housing, tenant screening and reporting, and eviction notice. So there's things coming out. It may not be specific to getting housing development done, but these kinds of things are out there to sort of help facilitate it all. So it's not like it hasn't been happening. It's just coming out in different forms of what we would normally expect.
Oh, very good, Garrick. Thanks for that. And I know there's been a lot of discussion. I've got a lot of phone calls and emails. It seems like there's more and more around the Department of Transportation and back to linkages to housing, transit-oriented developments, and so forth. One last question. Big picture, what are the takeaways from the third quarter report? How is the market in general? Any big trends and so forth?
Well, like we mentioned before, obviously it's supply, right? There's still a large backlog of units to be placed in service. Some of them are probably delayed for interest rate hikes and some of the construction costs. And I know construction debt is kind of the topic of conversation every deal that we're working on. But the fundamentals remain strong, right? Products are still pushing forward. And although there were some significant rent increases in 2021 and 2022, on average across those various markets, you would expect to see rental rates remain stable to modest and maybe even decline as the new supply is worked into the market. Again, though, I think some of that is really more multifamily in the non-affordable side, because from the affordable side, the demand is still super high. And Don, one trend you noted on year-end review on the market condition is to see more office conversions to multifamily, right? So the National Bureau of Economic Research released a working paper that actually provided criteria to identify appropriate properties for conversion. And I'm going to say these numbers slowly so you can hear them, right? So note it, 11% of all office buildings would be appropriate for conversions. And a CBRE report noted that there was 60 million square feet of office conversion planned or underway, with 48% of conversions targeted for multifamily. I know we've talked about it, but that seems like a real number there, right? That seems like we're moving in the right direction for that. I mean, every city I travel to, I see a lot of commercial space that's just sitting there dormant. And finally, with the severe shortage of housing and significant institutional dollars for both market rate and affordable housing, this sector should bode well for the actual long term. Like you mentioned, we know many in the industry, they're hunkering down, they're focusing on operations and asset management. But when those capital markets start to loosen and rates start to fall, I think this sector will be pretty quick to see significant investment.
Perfect. No, Garrick, I'm really excited about kind of that, the office to multifamily conversions and so forth. So very good. And that's a wrap on our third quarter multifamily sector report. Garrick and I enjoyed walking through the commercial real estate review and look forward ahead to 2024. Once again, I'm Don Bernards.
And I'm Garrick Gibson. Don't forget to subscribe so you don't miss an episode. For additional resources around multifamily housing, check out bakertilly.com. If you have a suggestion for the show, email us at bild@bakertilly.com. That's BUILD @bakertilly.com. See you next time on BuzzHouse.